23. Tom Hayes is with us to help us through the market on a difficult day. Musk admitted that his time at Doge is making running his businesses difficult, but he says he's staying at Doge for at least another year. What does that mean for Tesla's stock?
Well, number one, thank God for the country that he's doing that for the country to bring down yields. That's a very good thing with the cuts. You know, people talk about Elon Musk like he's a solopreneur working out of a WeWork office. I mean, this guy has 10,000, thousands of people running his businesses. I think they're going to be just fine. I think this is a short-term thing. You have, consumer sentiment is a little low with the uncertainty in the short term. We see this every 4 years until we have some certainty of policy. So I wouldn't bet against Elon Musk. It's a round trip since the beginning of the election. If you own it, you want to bet on him the long term. If you want to buy it for the first time, let's get through some short-term volatility, and I think there's going to be an opportunity.
The uncertainty surrounding tariffs.
Yeah.
Take the big picture for a second. That there is uncertainty about the tariffs
no question.
and the implications thereof.
Yeah.
But that doesn't bother you.
No, every 4 years, if you look at the seasonal tendency in February and early March is weakness. And we don't need great policy. We just need known policy. And right now we're in a period of uncertainty, and we're just going to deal with this for another week. But look at earnings. Earnings were up 18.2% for the last quarter. The underlying economy is strong. Consumer sentiment's a little weak because of the uncertainty in the short term. But if we look back towards history, what we see after mid-March, once there's some certainty around policy, the market tends to rally into summer. So be using the red days to buy. We've been buying every red day since that huge flush last Tuesday. Then we got the 500-point rebound. Then we're down. We were buying yesterday in the hole. And we'll probably have one or two more opportunities before this thing kind of bottoms and takes off.
So you guys, you're serious dip buyers.
Oh, absolutely. Yeah, and it's high quality. Some things have been overshot. The number one thing about the Mag 7, the correction in the Mag 7, everyone says tariffs. A lot of them aren't affected by tariffs. So what's actually been causing it? It's the carry trade unwind. The number one chart people should be watching is Japanese government bond yields. And today, they've backed off. They're at 20-year highs. They went to 157. That is a funding currency. People get free currency, and they invest in the most crowded trade, which is Mag 7. As those yields have gone up, Mag 7 has gone down. Today, those yields have come down. And we should see some stability in the NASDAQ today. That's
an interesting interpretation of why big tech has been selling off. The carry trade, all right?
Yep.
Tom, stay there with me for the hour, please. There you go. Hey, Tom, the crypto firms would no longer have to register with the SEC. What does that mean, and do you support it?
Yeah, this was related to trading firms, and it was a bit of an overreach. They tried to lump it in with treasury traders, treasury dealers, which is completely unrelated. If they had a case, it should have been a separate regulation that had to stand on its own merits. They didn't have a case, so the Trump administration says no mas. If you are managing outside money for other people and you're responsible for other people like I do, you have to register with the SEC, and I think that's a good safeguard so that you're regulated and you're following all the rules and everything is safe for the client. Even if you're managing crypto, I think for other people, that should probably be under consideration. If you're managing it for yourself or you're a trading firm and proprietary capital, absolutely not. I think this is a good move.
But these changes are good for cryptos.
I agree.
Likely to increase their price and value.
I think, deregulation is always a constructive thing for the price of an asset, and I think crypto will be no different.
Tom, thank you. You're going to stay with me for the hour, I believe.
I'd love to.
Lucky guy. All right. Come back in, Thomas. You brought stock picks. You've gone back to the well. Crown Castle. You've liked them. They have gone up. Aren't they cell phone towers or something?
That's right. 40,000 cell phone towers, 7% dividend yield while you wait for the stock appreciation. And they're selling off the low return fiber business for over $8 billion to Zio Group. These existing 40,000 towers that they're going to be left with and all the cash, they require very little maintenance. It's just a cash machine that's going to pay you out dividends. They're going to buy back shares. And it's a rate play. So as Musk is successful with Doge and yields come down, these type of instruments, the REITs, go up because they trade on interest rates.
Wait a minute. If I buy it now at $98 a share, the yield is 7%?
Yeah, just in that range. And you're going to get capital appreciation over the next few years on top of it. And your yield will be locked in because you're buying low and selling high. That's what we like to do on this show,
Yeah,
right,
you're supposed to do that. Stanley, Black & Decker, real fast. What do you like?
Construction play, again, a play on rates. Construction has been down because rates have been high and new home starts and confidence and all that. That is going to come back as rates come down. They've taken $2 billion of costs out of the business. They overstocked during COVID. Now they've destocked. Now they're restocking. This play is going to be great. That $2 billion, gross margins are going up from 20% to 35%. This business is going to be off to the races. This is a leverage play. You say home builders are down. I want to buy home builders. Don't buy home builders. Buy Stanley Black & Decker. They're going to benefit when construction comes back in a leveraged way, much more so than the home builders do.
Sounds like an order to me.
I love it, my friend.
We'll take that. We'll take it. Thanks, Tom. Coming up, Elon. What do you think, Tom? What would a win against Canada look like?
I think even tariffs. I think the administration should put up a website and say, Canada tariffs us this, and this, line item, every single thing. We tariff them this, and this, and get those numbers even. That's all we want is fair trade, but have transparency and say,
well, that's reciprocal tariffs, isn't
reciprocal.
it? Which you want on April the 2nd.
We're not trying to start a trade war. We just want a fair and level trade. We import about 6 million barrels a day from Canada. That's good for our refiners. They refine about 60% of that, 4 million barrels a day. It's good for Canada because they have that heavy, thick oil. So there are a lot of good things that are happening between the countries, but we just need it even. We want our banks to be able to do business in Canada, just like they can do business in the U.S. So President Trump is using these tariffs as a way to make things fair, make it equal trade, make it equal regulation, let our banks do business with them, and this will be a positive thing when all is said and done.
Tom Hayes, thank you very much for being with us for the hour today. We appreciate it.
Thanks for having me.
See you soon.